Derek Macpherson. I'm the President and CEO of Gold79 Mines Ltd. We are a Southwest U.S. gold explorer with two projects that we're exploring ourselves and one that we've just joint ventured or optioned to Kinross for them to explore next year.
Derek, good to see you. I haven't seen you since March. I can ask you a question. Pretty tough markets out there. I think you'd agree, and pretty risk-off environment too. So why on earth would anyone invest in your company?
That's a great question, and why am I putting my money in my own company? Is part of it as well. When you look at the landscape of what you do, I used to be, as you know, I used to be a sell-side analyst, and what I did when I was a sell-side analyst is you look for opportunities that are disconnected from the fundamentals, right? In an environment like this, it doesn't matter the fundamentals matter less for selling, right? People are looking for, in a small junior explorer co like Gold79, someone's looking to raise $500 for whatever reason out of their portfolio, and that $500 can move a stock like Gold79 materially. So what did I used to look for, and how am I trying to position Gold79 as we go forward? I think the first thing is do you have somebody on the other side that you trust as a management team? Now, I am pretty biased on this because I do trust myself, and I am putting my own money where what I'm pursuing. But I think that it's one of those things that you're not going to wake up one day and they've done something stupid. And I think that we're working really hard to do that, and we're working really hard to make sure that the company is in good shape for when the market turns, but also continues to move forward. And part of that was the deal with Kinross. Part of that was some of the more lower cost exploration work we've done at Gold Chain this year. Second thing, probably the second thing you look for is a true value disconnect. Is there some metric that you can look at and say, oh, this thing is cheap? And so Gold79's 3.5 to 4 million market cap right now. It's incredibly cheap. We have three good projects. I've always said it could always justify the market cap. I think, recently, one of our neighbors in their closer Arizona properties had real success. Arizona Silver, they're up to an 18 million market cap. They're just off the southern edge of our property. They're drilling a very similar target than we are. They're a little more advanced as far as drill route goes. They're at an 18 million market cap. We're at 3.5. I think that there is a true value disconnect from that perspective, and so there's an opportunity to re-rate. And so those are the two things that I usually look for, and then obviously catalysts. And we could talk a little bit about what we're going to do to try and move the needle ahead now that we've got this deal done with Kinross.
Right. Okay. So I get the kind of high leverage return if you get it right. But there's a whole bunch of stuff you got to get right. So tell us a little bit more about the Kinross deal first of all.
Yeah, so if you remember, our Jefferson Canyon project is 7 kilometers from Round Mountain. We always sort of knew that it was going to be a Kinross project at some point. It's a natural. There are real synergies with the Round Mountain infrastructure. If it's a mine, that ore was going through Round Mountain. So the question was when, and from my perspective, it was either going to be early or late. And so by doing this deal now early, before we've drilled a hole, there's a couple things happen. We got some cash up front, which helps us in the near term with our balance sheet. We add another cornerstone investor with Kinross. They're taking 9.9. They're going to take up to 9.9% of the company. And they're committing to do the first work. And this is they're going to get to decide whether it's a Kinross project or not. And with that lens of, hey, this is if the most likely scenarios, if this is ore, it goes through Round Mountain. They're spending the high risk dollars to determine if it is ore effectively. And I think that that's a good opportunity. And then once they've done all of that, which is about, between the payments and what in the spend commitment, that's almost $1 million US, which is a lot of money for us to raise in the current environment. Then they have, if they like it, they have the opportunity to give us another $5 million to take on 70% of the project, or $10 million to take on 80%. And so for us, that is it lowers our exploration risk on Jefferson Canyon, because if we went out there and spent that $600,000, which would be almost $1 million US, almost $1 million Canadian, and we raised that at our market cap before we announced this deal, which was bumping right around $3 million, we're taking pretty significant dilution for a pretty high risk drill program. Whereas the question is, when you have the exploration projects, is it a mine? And Kinross is going to answer that question for us. And if it's a mine, we have upside, we have further payments we're going to get. And if it's not, we'll have to review what we think of that project if Kinross decides to walk away. But I'll be hard pressed to put another dollar in the ground into it if the natural buyer isn't there.
Okay, so you had a good reaction from the market on that announcement, and I think that the terms of the agreement are in the press release. We don't need to kind of go over it, but you kind of eking out small payments here and there and covering things like payments and cost reimbursements and sort of lease payments and so forth. And it's all kind of good. So they can basically bug out at any time, but they're going to spend $1 million. They have this. So let me be clear. They've got to spend $1 million. Got 4 years to do it with a 2-year extension. But can they stop at any moment, or do they need to spend that full $1 million?
So the $1 million, it's $325,000 to us. Directly to Gold79 and $600,000 US into the ground, just to clarify. But that $600,000 US, if they don't spend all $600,000, which would be a small drill program based on what we've costed out for there, if they don't spend that, they have to pay that out to us in cash. I think my view is that they'll spend it. I think I think that they've done a lot of work on the project just as we have. This wasn't something that happened overnight. This is a 19-month process. We did our site visits in May for it, so it's something that's been, in the works for a while. And I think that's, I think they know where and what they want to drill to figure out whether they've got, a ore body of sufficient size to go through the effort to permit it into a mine and run it through Round Mountain.
Okay, so it's early days. We see lots of these deals where small companies get a mid-tier or a large company step in and they kind of option this, and they've got lots of options and lots of projects all around the world. If they decide not to go forward in any way, shape, or form, what does that say about the viability of your company as a whole?
Well, I think that's the important part for us, is that we didn't. We have three good projects in the Southwest U.S. and while a lot of people, I think I have two groups of investors, one that like the suite of assets, and a lot of people that were there for Jefferson as our shareholder group. I think that if we just had Jefferson Canyon, I wouldn't have done this deal. That wouldn't have made sense. It's not what you do. Our Tip Top project, we haven't spent any time on. We'll start to think about going through the process of permitting. It's not cheap. We're just as an example, in Jefferson, we're $350,000 US into permits at this point. It's part of the reason Kinross wanted to do a deal with us. But what we're seeing at our Gold Chain project, which we have been doing work on, which is easier and cheaper to work at, it's been pretty exciting. We followed up some pretty good drill results last year with some really good sampling. Started to show continuity at Tyra, which is again that very similar target to the Philadelphia project by Arizona Silver. Plus, we acquired a set of patents, so that's ground we own 100%, and it has spectacular high-graded surface on it. And so, like I said, if we were a one asset company, you wouldn't do this kind of deal. It doesn't make sense because you're putting your fate in the hands of somebody else. I think that we have other assets that make sense, and if Kinross finds something that they really like, it's kind of a bonus. And if they walk away, that's $1 million of shareholder money that I didn't spend determining that a project wasn't viable for the long term. I suspect that they won't walk away. There's 145 drill holes at Jefferson Canyon. They're just trying to prove that it has continuity at depth, I think, with their
right. Okay.
Program.
So if they stay on board, they get they got to give you $5 million for 70% of the company. They can option another, or 10% for another further $5 million. And if you get, I think you took about, what was it? If your interests are diluted below 10%, then that converts to 1% NSR. Okay, so that's that. Let's park that up with like I said, the market being what it is. No one wants to go and raise capital in a market like this. In terms of how you move Tip Top and Gold Chain along, are you looking to do similar types of deals? Or do you have to sort of take control of that and actually start spending some money on those? I mean, how are you playing this market?
Well, I think that, in the case of Jefferson, there was a natural partner. Whereas, with Gold Chain and Tip Top, I think I said this in our first interview. I'm very pragmatic. If someone comes up and offers me a fistful of money to do something to take over a project, I can take that fistful of money and turn it into something else, or go to another project, or return to shareholders, or whatever. There's lots of of options. I think, our plan right now for what we have in front of us is we're going to focus on gold chain. As I said, it's cheaper and easier for us to move it forward. So in the current market conditions where capital is hard to come by, it makes it a little bit easier. And then, we're going to start looking at permitting at Tip Top because I think we can create some value there with that. But we've been entertaining offers on Tip Top on joint venture opportunities. None of them really were enough to justify what we think the project is. So we've sort of we haven't jumped at any of those just yet. And then as I said, on gold chain, I think there's I think we have a significant opportunity to prove that it has multi-million-dollar potential, and it's on us to start demonstrating to the market that it has that potential, or prove that it doesn't, and go find something else to explore.
Right. Okay. So how do you kind of manage this? Because it seems like in this environment, you've got to be so careful with every dollar, with almost every decision, because it's it could be terminal or time delaying, which in effect is terminal. So I noticed the release on Tavish project. You're just trying to sort of tidy the balance sheet and kind of look busy without necessarily spending a ton of money. It seems. So, what can you tell us about what went on there?
Yeah, so that was a sort of in 2019 the company shifted away from its Mexican. It was a Mexican focused company. It's shifted away from that to the Southwest U.S. And so that was sort of a legacy position. We had been working with Minorum, who we optioned the project to, and who now Fortuna is exploring it. We had optioned that to them in 2018 or 2019. It was a residual 20% interest. It was capped upside. There was no, and so it was easier for us to get it. It was more beneficial for us to get $200,000 now than maybe $1 million never. And so that's how we approached it. And like any deal, you got to have two willing parties. And Minorum were, they wanted to consolidate it. They saw an opportunity to consolidate as well, and so it made sense from that perspective. And so that was just, and frankly, we have to maintain a Mexican sub to hold that property. There are, it's just costs and time that we don't have that we can focus elsewhere. And so that was part of the reason for that. Additionally, and so then, how do you take that? So that's, it's $200,000 Canadian, not a ton of money, but it's money in the door. And for something the market's obviously not giving us value for anyways. And to be honest with you, at $3 million market cap, or just over $3 or $4 million market cap, not giving us value for much. But I think that opportunity, again, those are things that took a year, right? I was CEO just over a year when I first started talking to Minorum about dealing with that. So these things take time, and so you've always got to be thinking about them and moving them ahead. And so, but those, this little bit of money, so we got some money from Kinross. We're going to get some money we have some money from Minorum. It shores up the balance sheet, puts us in a good spot, and then now we're going to focus our efforts and the limited resources we have on gold chain.
Right, and you also raised some money back in August, like $500,000.
No,
right?
So what actually happened,
was
there? We didn't raise that money. I had the deal done. I had all $500,000 placed. So in July we were talking with Kinross. Kinross I thought we were pretty far apart on terms. I couldn't wait any longer from a corporate point of view, so we needed to raise money. So we went down the road to raise that money. Kinross came back with these terms that we could accept. And that, unfortunately we couldn't, one of the caveats to closing a financing or opening a financing is that if you have material non-public information. So when we opened the financing, we didn't. When we closed, before we could close it, we did. And so, and frankly, we don't want to be a group that, that financing was being taken down 40% by insiders. You don't want to be a group that takes down 40% of a financing and then a month later you announce a deal with Kinross, right? That a deeply discounted financing, that's not kosher. And so, we shelved it, and it's terrible because, I mentioned this before. I used to work on the sell side. You work on the sell side. The answer is you always take the money. And so it was very frustrating especially in this environment, to have to put that money on the side. So, now we're going to have an investment. Kinross is effectively the lead owner on next financing. So we are probably going to have to execute a small raise in the medium term. We don't have to, but the markets has reacted positively. So we'll do a small raise, and that probably definitely gets us some drill prep work at Gold Chain and may even get us a small drill program there.
So what about timing? Timing is really, really important for all of these things, luck and timing, right? We're talking about sort of, we're fiddling around with the kind of the balance sheet and the cash position and bringing in strategic partners on one of the assets. So it kind of feels like you are just trying to keep the plate spinning, right, in a market like this. But if you put your analyst hat back on and you look at your company, well, how would you assess yourself? How would you say to your clients with your analyst hat on, do you know what? This company's got something. Yes, there's lots of companies of this size. Yes, there's lots of precious metal companies of this size, all saying the same thing. But this one's different. Why?
Well, I think there's two aspects to that. I think everyone would say they're cheap, but cheap isn't what gets you what makes you money. Cheap is the state you're in. I think there's two things. One, I think we've shown that we're very pragmatic on how we manage the company, how we work the assets, and how we move things ahead. Right. This deal with Kinross, the deal to sell our residual interest to Vici, those are things that let us get cash in the door and I'm going to describe it as a less dilutive basis. That all forms of finance are dilutive in some way, shape, or form, but there's less. These ones were less dilutive. Calling them non-dilutive would be incorrect. So I thought these were less dilutive than us going to raise the money ourselves. The second thing is that with these sort of these pragmatic things that we've done, or these practical things that we've done to keep, as you said, keep the plate spinning. It positions us well to go actually to go generate news. The thing that converts a company from cheap to not cheap is catalyst. It's the fact that you're going to go do work, the fact that you're demonstrating value. And I think if we can position ourselves with the next step is to position ourselves to be able to be drilling at Gold Chain, and then all of a sudden next year in 2023 we've had all financing dependent, but we could drill at Gold Chain. We have targets on the patents. We don't have to permit. It's very quick. And hopefully Kinross is drilling at Jefferson Canyon, and they get some love there. And now we're drilling 2 projects. And I think that's something that we for investors. And if you're coming in now, that's what has potential to re-rate the stock from what we've already described as cheap. How do you get not cheap is the question, and how investors make money. And I think those are the things that what I worry about with a lot of small companies is that what happens with these companies and is that management isn't getting paid, the payables start to run up, etc. Right, and then all of a sudden that first raise coming out of the gate is basically to deal with all of those. As soon as the market turns, let's say the market turns in January. Let's all hope the market turns in January, and the first raise coming out of the gate, all of a sudden you're $300,000-$400,000. Let's say you're raising $1 million or $2 million. The first $300,000-$400,000 is just going to clean up the balance sheet, right? And so these small things that we've done have allowed us to clean up the balance sheet and have from a payables perspective, and have us in good shape, going into what we hope is a market that will turn sort of in the near term.
And what are the things that are in your control or in your toolbox that you can do? Because we've seen in other sectors a lot of M&A, a lot of roll-ups happening out of necessity, partly because it's a nice news item, partly because it sounds like a catalyst for change, when the reality is maybe somewhat different. Precious metal's been under a lot of pressure for 18 months now. I keep saying it, the normal rules don't apply for gold at the moment, despite what the gold bulls hope. So for companies like yours, maybe whether you're talking about Nevada or down in Arizona, there's a lot of companies talking the same game. Do you guys have to get together and say, do you know what, maybe we just haven't timed this right? We need to do something big here. 1, to survive, 2, to kind of maintain shareholder value, or however you look at it. But how are you viewing it in terms of like the last resort options available to you?
I think M&A is something. At the beginning of this year, I knew the market wasn't. We all knew the market wasn't going to be spectacular. I don't think any of us thought it was going to be as bad as it was. I've spent time talking to my peers. I mean, there's probably 50 to 75 Southwest U.S. sub 20 million market cap gold explorers. If you take Idaho, Nevada, Utah, Arizona, kind of group those together. So I started talking to my peers about, hey, let's, maybe I've got projects, you've got a little bit of cash, or I had maybe at that time I had a little bit of cash and they had projects. And the idea being that, maybe, 1 + 1 at least equals 2, but maybe equals 2 and a bit. And, from this perspective, we can, do something with shareholders. I also, like I said, I knew this Kinross deal was coming for 19 months, right? Or we were working on for 19 months. So it wasn't like it was a surprise when it arrived. And so you're thinking to yourself, okay, having just one project that you're exploring is not necessarily the best spot to be in. Now we still have 2, so that's fine. But I think I am open to those ideas as long as we can find, it's got to be 1 + 1 = 2 and a bit. And I think that's the issue with a lot of these. A lot of the junior M&A is that there's always social issues, right? People like to keep their jobs. Change of control payments generally pretty high. And so you have 2 underfunded juniors get together and you have $500,000 in change of control payments. That doesn't work. And then the third is that, am I really generating synergies? And I think you are, because I think what happens in the Southwest US in particular is that everyone draws on the same pool of resources, the same drillers, the same consultants, because no one really has full-time employees, because you can't afford to have full-time employees on the geologic side. And so, and so all of a sudden, if you had a group of geologists that you could employ full-time because you had 5 projects that you were working on, right? And at different stages, some maybe one is drill ready, one isn't. And I think that there's a market for that. But I finding for us, we've been looking at it, we've been talking to people, finding a willing dance partner, it has been a challenge. So.
Yeah, I guess the kind of cliche there is 1 + 1 = 1.
Right.
Sometimes.
Well, that's
and that's the difficulty. That's the difficulty in all of this. And I guess the other kind of slightly amusing thing, see, as for someone looking in from outside, is it's like, well, we're all looking at each other. But as you say, point number 1 for you was job protection, job security. It's not so easy to get over that hump, let alone move on to the other types of discussions you need to have. But it's them, not us. We're a great project, they're not. So, we've discounted all of these projects, but we can't find a good one. And the truth is, sometimes some of the companies out there, they just don't have a good enough project to attract that kind of conversation. But essentially, anyway, you've done it with Kinross. That's a good start. Not too bad. As a dance partner.
And I think that there's that from the outside looking in, if I, to put the other hat on as an investor or when I was an analyst, I think that's something you need to keep, as an investor looking at it, you need to keep in mind who's willing to do something and who's just going to try and who's trying to maintain the status quo. Right. And, I don't like companies that just go, okay, market's bad, we're gonna go sit on our hands. I don't think that's a good strategy. I think that's a good way to, watch your market cap slowly decline into a tough market and decline more because you don't have any work on the go. I think you always, I think the state of capital markets dictates how fast or slowly you move your project ahead. But generally speaking, you always need to be moving forward, doing something, right? To making your company more valuable for your shareholders. Otherwise, why are you there collecting a paycheck? Or collecting payables Indeed. Of some of these companies. some are.
Indeed. I have to say, I totally called the gold market wrong this year. I thought this would be a great year for gold. I really did. I was calling it at the end of last year. Could not have been more wrong. Put my hand up to that one, but I suspect I and several other people are in the same boat there. So with your ex-analyst hat on, and then with your CEO hat on, how do you play gold next year?
Well, I think, as the analyst hat, I think there's an argument to make that gold needs to re-rate at some point. We're running whatever in the U.S. it's 8% inflation. You're seeing, the increase in rates is starting to break the financial system. So you're starting to look at these things that are breaking. That generally this is when gold does well. It hasn't yet, but oftentimes I still think we are still in that period where people are chasing liquidity, and this is unlike say like a 2008 or other sort of or 2020 where it was a very sharp, okay, everyone's chasing liquidity for a month and then there's, the central bank steps in and there's a correction and it happens very quickly. I think it's been a very slow burn on liquidity. And I think that's why, gold still has a bid. And while gold has outperformed, it hasn't done what we all, would be the only person thinking that gold should be north of 2,000, right? Should have been north of 2,000 this year. And it's not. But I think that liquidity, we're still in that period where, for lack of a better description, it's risk off. So how do you manage a situation like that? Okay, we're in risk off still. We don't know when that turn is going to be. When all of a sudden people go, okay, we're in a recession now. That's usually gold reacts first. One of the first things to rally once central banks have to take their foot off the brake. How do you position that as a CEO? Because you don't know when that timing is, right? As a CEO of a gold company, the great killer of junior mining companies and explorers and pre-revenue companies is time. Time is the great killer. And so what you need to do is position yourself to buy time, right? And so that was the intent on that raise in August that we ended up having to pull was, $500,000 got us to the new year, right? Okay, I bought myself 6 months of a 6-month window, right? What we're doing right now is, the deal with Tavici, the deal with Kinross, if we do a farther, it's all to buy time, but it's to buy time so that when the market turns, we could do, we've moved the projects ahead a little bit, not as much as the market will allow, but we're in a good financial position that when we can raise real money to be aggressive at Gold Chain in particular, that we're not, that money's going into the ground and investors can see how they're re-rating. They're not, cleaning up my payables as an example, with the first dollars in. So I think that's how you manage as a CEO is you buy yourself as much time as possible. You kick the can down the road as far as you can. It's why the chairman and I both the executive chairman and I both cut our salaries in August as well on that same basis of how do we buy time? And that's what we're looking for it seems odd, but it's buying time until the market turns. And so that's how we're approaching it.
Yeah. You got to be at the table to play the game, don't you?
Exactly.
Derek, really fascinating conversation. I appreciate the view from the analyst view, some really honest assessment of what's going on out there and how to play that, and also same honest kind of response from you as usual with regards to what you were doing at your own company at Gold79. So appreciate your time. Stay in touch. Sounds like we need to talk in the new year.
I think so. Thanks, Matthew.